Namaste friends, welcome back to GyanVeda channel. Today we are discussing about top FlexiCap equity funds. In addition, we are going to tell you how we have found the top funds which may give you a very good returns over long term. As a formality, if you have visited our channel for the first time, we request you to please subscribe, like, share. Don't forget to press on the bell icon so you'll get notification for new and knowledgeful videos. Earlier videos we have discussed about top large cap funds, top hybrid funds. So similar things we are going to discuss in this video also. So if you want, just you have a link in the I box also, and you can mention in the comment box if you like to have new similar videos, and we'll make videos based on that. So today we will discuss about the top performing flexicap funds which have given very good returns over the last 10 years. So it has never disappointed the investors. It has a very good allocation ratio. It has given a stable returns over long term. When the market is not good, it is down. So it should be able to perform good way. Also, it should be flexible enough to do the dynamic allocation. It should generate the stable wealth over the long term. It should be affordable. Also, it should be able to match a good growth. So let's see how we have found it. In FlexiCap funds, friends, we have minimum equity allocation need to be 65%. In addition, there is no minimum or maximum percentage to be allocated in each bucket like large cap, mid cap, small cap, like we had this limitation in the multi-cap fund. We have a similar video. You can get the link on our channel also. Also, in these funds, the investor will get flavors of all the equity types mostly. So fund managers will try to allocate appropriate amount in large cap, mid cap, small cap, even sometimes in micro cap funds also. These funds are basically made to tackle market ups and downs very effectively. It is supposed to have a flexible allocation without knowing to the investor. So fund manager should be able to take care of these things. Whenever we invest into market, there can be two approaches, top down and down top. So the top-down approach normally takes into consideration global economy, GDP forecast, government policies, what is the inflation going on, what are the financial macros, how are the government or the other private opportunities for growth. Normally these principles are applied to the large cap selection. Also in downtime, they specifically check the company valuation, then fundamentals, what is the company management, the growth opportunity in this company, historical performance, the ability to sustain ups and downs. Normally these are used for mid and small cap. Why I am telling this? The flexi cap funds are designed in such a way that it will use mix approach for both these things. So you will have a better selection over the long term. FlexiCap funds, you will have certain types of benefits like you will have an opportunity to limit the downside when market is performing negative. Fund manager can do a frequent rebalancing to accommodate the performance of the fund. Also, there can be an allocation change from the fund manager in the each bucket like large cap, mid cap, how much he want to put into small cap, in debt, or even he can keep into the cash or cash equivalents. So based on the performances, we have took few number of top competitors. So we have taken top 10 funds, and out of that we have found the winners at the end of this video. So please don't skip the video in between. So we have picked from Aditya Birla Sun Life FlexiCap funds, then Canara Robeco FlexiCap fund is also in the race, DSP FlexiCap fund, Franklin India FlexiCap fund, HSBC FlexiCap fund, IDFC FlexiCap fund, JM FlexiCap fund, Kotak FlexiCap fund, SBI FlexiCap fund, and UTI FlexiCap funds. These funds, we can't say that these funds are bad. These are one of the top funds as per our study in the market in the FlexiCap bucket, and we have found out the winners among these funds. We have used certain type of criteria to find out the winners of these funds. So what are those criteria? So we have considered the risk return ratio of these funds. Then how is the SIP returns? Because for small investors, SIP is considered to be the best way to generate revenue or the of profit. Also, we have considered the expense ratio also, then the CRISIL rank. As you must be knowing, the CRISIL is an institution which is much more reliable for an investment return. It compares the funds returns respect to the other funds in the same category. Not only this, we have used few other criteria also. We have picked the funds which have minimum 10 years market present. Then we have compared their 10 years returns compared with the 5 years, 3 years, 2 years, and even we have considered last 1 year returns also. That is how we are trying to find the best fund suitable for you. So we can compare here the data for the top 10 funds here for our comparison. If you want, you can pause this video for a minute, take a look at the each funds and what each column in this table tells. Anyway, we are going to explain you. So here you can see that in terms of asset, the Kotak fund is looking like the largest among this category, and JM FlexiCap fund is showing the very low asset, just 173 crores. Also in this table we have given the CRISIL rank. If we are comparing the CRISIL rank, UTI fund is the 5-star fund, then Canara and DSP are showing the 4-star fund. Also we have seen in the 1 year category, you can see here Franklin is giving the top performance. Then 2 years, you can see here the UTI is the topper here. Then in 3 years, again UTI here. In 5 years, you can say Canara Robeco and UTI are the toppers here. When we compare the 10-year performance, you can see consistently this UTI fund has given a 17% return over last 10 years, friends. So how many winners we have picked for you among these funds? So anyways, as usual, we are picking the top 3 funds which have never disappointed the investors over the last 10 years. In this video, we have 2 additional funds also mentioned, and we will give you the reasons why we have given these 2 funds. Instead of just relying on the absolute returns, we have considered the SIP returns of these funds also. So we have listed into 2 buckets. We have taken the SIP returns of the 5 years and the 10 years for the top 3 funds. So here you can see the UTI has given almost 1 lakh return in last 5 years for the SIP, and then DSP and Aditya Birla. Similarly, when we compare the 10 years here, the UTI is coming as a winner, and after that Aditya Birla and then DSP. As we have mentioned, we have considered the risk return ratio also into considerations. So you can see here in these top 3 funds, Aditya Birla has the equity allocation of almost 96%. These figures are not constant, friends. If you are watching this video sometime later, this allocation might get changed, any of these figures. So these are just at a specific point of time we have taken these snapshots. And here you can see DSP has allocated over 99% in equity. So they don't have much in the cash or debt here. Also, if you have seen the large cap, mid cap and small cap, so UTI has the least allocation in large cap, then mid cap it has the highest, and small cap also it has the least allocation. So these varies, and if you want like more stable funds, you can see here the Aditya Birla has highest allocation in large cap. So large cap companies are supposed to be more stable than the others. Also, when we compared the chart of these funds along with Nifty 50 for last 5 years, you can see here Nifty 50 has given 87% approximately, then UTI has given 123%, which is the highest among these ones, and Aditya Birla is around 98-99%, you can see. Based on our study, not only with the given parameters plus few additional things, we have come up with the top three funds among these ones. So third number is coming for the Aditya Birla Sun Life FlexiCap funds, then DSP FlexiCap fund is on the second position, and for number one it is UTI FlexiCap funds. But video doesn't end here, friends. We have two more funds for you. So what are these additional two funds which are considered like a black horses, and why these were not considered in our top three? So we can give you, just take a look at the chart. So these funds do not have presence in market for 10 years. That is the reason those were not considered. But also we can't say that past performance is a guarantee that you will get the similar performance in future. So we have data available for last 5 years. So Parag Parikh FlexiCap funds and PGIM India FlexiCap funds, these two funds have given higher returns compared to our top three funds, right? Because they have certain exposure to the global market also. Like if we have seen the Parag Parikh FlexiCap fund, it has allocation to some United States companies like Facebook, Microsoft, Apple. Their allocation is not fixed, so it may get changed. Also, if you have seen in the equity bucket, Parag Parikh has the 95% approximately allocation in equity, and they have some cash. Okay, so that whenever opportunity comes or some market correction comes, they can invest these funds for the additional purchase. Also, we can, if we have seen the large cap allocation for PGIM is least, and it has more allocation in mid cap and small cap. So you can see here these have some additional risk factors. So not everyone wants to take more risk. So if your risk ability is higher, if you are at the young age and you want to generate more returns over the long term, you may consider these two funds also. Now, what is the best strategy to invest in these funds if you are convinced? So best approach, what we would say, is the SIP. You should always invest in the systematic approach. Then in case you have some lump sum amount, you can put currently into liquid or debt fund, and systematically you can transfer these to the FlexiCap funds. Then whenever market corrects to certain extent, depend on your ability, you can do certain top up. So we have few additional videos also, friends, on these approaches. So please take a look in the I box and visit the channel. Also, if you can diversify your fund allocation into multiple funds or multiple types of funds, that will have the ability to generate more stable returns over long term. Let's not stretch this video beyond. So if you like this channel, please don't forget to subscribe, like and share. Press the bell icon so you will get notification for our new videos. Before investing, always discuss with your financial advisor and have your own study. Happy investing. Namaste. Thank you.